Best single day drop in rates since 2009. That's right, what a wild ride over the last week with economic news from Jerome Powell's remarks last week to the Consumer Price Index report that delivered a good report, better than we've seen in a long time, on Thursday morning. So I'm not an economist, but these reports do affect home buyers and sellers, so let's dive in. If you want to follow along with daily updates on interest rates, I like to read mortgagenewsdaily.com. It's a great website to keep real estate professionals in the know about mortgage interest rates. So there are two key inflation reports in the US. Number one is the CPI, that's the Consumer Price Index, and then the PCE, the Personal Consumption Expenditures. According to Mortgage News Daily, CPI gets almost all the market's response because it comes out 2 weeks earlier and it doesn't factor in food and energy cost. CPI is the king of economic data in 2022 because inflation is the dominant focus of the financial market and the Federal Reserve, aka the Fed. The Fed sets policies intended to keep inflation at a low, stable level. Runaway inflation causes the Fed to hike interest rates in order to slow down the demand of the economy. In the post-pandemic environment where a good amount of inflation is thought to be driven by the supply side of the economy, that's resulted in the Fed being particularly aggressive in trying to tamp down demand. Fed rates do affect longer-term rates, like mortgages. What made this week's report so important was that it came in below the expected increase of 0.5%. Instead, it came in at 0.3%. This may sound negligible, but it may be a leading indicator that the Fed moves are finally making a dent in inflation numbers. However, I quote from the same article, "This is the best argument to date that inflation is turning a corner. But as we've said time and again, confirmation will require 2 consecutive months of similar activities. So we'll keep you posted on next month's numbers in December." All right, so what does this mean for mortgage rates? Well, mortgage rates responded well. We were seeing above 7% earlier in the week to rates almost 0.5% less by Thursday afternoon and Friday. I've been seeing local lender rate sheets in the mid-low to 6 depending on the program. Of course, these kind of rates can change depending on your credit score, down payment, and type of loan, so make sure you reach out to our team to guide you to great local lenders. All right, let's put some real numbers behind this great improvement. Let's say you ran numbers to purchase a $700,000 house with 10% down on Monday, November 7th, 2022. And you're probably looking around 7% interest rate and a principal and interest payment around $4,298 a month. If you locked in a loan on Friday, you were looking at $3,982 a month. You still need to add in your taxes and insurance, but that's about a $316 difference. Stay tuned for our local Northern Virginia stats next week. I'm interested to see how the median sold price for homes, how much the list to sold ratio was, as well as if the days on market increased over the last month. I'll share those details with you next week. Our team is here to guide our clients in this ever-changing housing market, so make sure to get in touch with us to plan your strategy. Come check out this amazing single-family home in Springfield, Sunday from 1 p.m. to 3 p.m. This 4-bedroom, 2.5 bath home with a 2-car garage, and I gotta tell you, when you go in the garage, there's lots of space in the attic. It has a gorgeous pool, and it's ready for you to make it your home. So stop by, take a look at this house, and let's talk some shop. Until next time.